Hello and good day to all friends. I am Moshtaba Rosti from the Thales team, and today is November 29th, 2025. I'm here with a midterm analysis of Bitcoin for the December 26th expiration. As you can see, this analysis was prepared yesterday, November 28th, and I will be presenting it to you. Well, we started with the Thales heat map and reviewed the open positions for the December 26th expiration. As you can see, we've had trades open for the December 26th expiration since October, even before October, but you can see that the bulk of the volume for the end of December has entered the market since November. About 440,000 Bitcoin contracts have been traded, with around 270,000 of those being call options. So, if we filter for calls and puts, we see that out of these 440,000, 270,000 are call trades. An important point is the high volume of trades for strike prices of 100,000, 106,000, 112,000, and around 118,000, which you can see are highlighted in purple. This is according to the heat map, where the color gauge shows the trade volume for each color. Here we have the purple color, and interestingly, for the 120,000 strike price, even from before, say November 9th, from early November, you can see this strike price for this expiration is marked with a high color, and recently you can see the volume here as well. We can see how the color changes and what volume of trades has occurred for these strike prices, which in itself can give us a bullish outlook. In the next slide, we focused on trades from November 20th onward, that is, after the last drop and the 80,600 bottom. We considered that point because it was after a sharp decline and a turning point in the market, and we're analyzing for the December 26th expiration. You can see that right now we're close to the delta peak, and the number is 97,000, which is what the yellow arrow shows. From that point onward, based on delta, we are seeing call selling which starts at the ceiling. The average of these call sales shows a ceiling of 109,000 here. The red curve also shows a movement, in fact, a bullish movement. Yes, I got distracted by this red arrow, but the red curve also shows a strong bullish move from 100,000, and you can see how sharply it rises up to 106,000, which is quite interesting. On the other hand, on the lower side, you can also see put buying. Here, based on delta, we have relatively heavy put buying, with the average around 84,000. It seems that around 97,000 is a resistance point where a ceiling might start for us, and the price could react a bit there, and actually, we might see a range form there. An important point is this structure you're seeing here. Look, we'll talk more about this structure later on, what caused it, and why we're seeing it here. Let's move to the next slide. As you can see, we've moved the slider forward to November 26th, and we've considered the trades from that date. You can see that the curve's bullish shape becomes dominant, meaning that from November 26th, the trades for December have turned bullish. In this curve, a bottom around 824,000 is still visible, which could even continue down to 728,000 at the lower end. But on the upside, don't overlook the delta of the call buy volume. The degree of delta penetration in the profit of the call buy volume is showing us that the gamma peak is actually at 103,000. The gamma peak is at 103,000, and 113,000 could be the next target. This blue point, this intersection of delta and gamma, again gives us a bullish outlook. In the next slide, trades have been processed in the database for the December 26th expiration and analyzed. As you can see, the curve has taken the form of a call sell, meaning it's as if the process database for December 26th has identified a ceiling. We can see three important points here. Around 92,000, which is roughly where we are now, 100,000, which you can see is moving toward this 106,000 level here. This loss at 100,000 has to be endured. That 100,000 is a spot where we'll likely see a reaction again. And finally, 106,000, which is the point after which the curve enters a steep loss. And our negative gamma peak is also roughly at 106,000, which we can Let's move to the next slide by moving the slider forward to November 26th. Again, in the same database as the previous image, we moved the slider to November 26th, and you can still see the call selling and the 3 important points we mentioned are visible. That is, as trades move forward, considering the most recent trades and the latest date, even after November 26th, there is no change in the curve. My negative gamma here also comes in around 103 to 105, which is again interesting. Let's go to the next slide. In this slide, we analyze trades above Davis Bitcoin from November 20th for the end of December. A fluctuation between 106,000 and 112,000 in profit has been observed, and the point where the curve enters profit is here, showing us around 102,000. Now, interestingly, out of a total of 29,000 bitcoins bought, the total Davis Bitcoin on the upside is 57,000 bitcoins, of which 29,000 bitcoins have been bought. Of these purchases, 25,500 bitcoins belong to call buyers, which itself indicates a very strong bullish sentiment for the end of December. Their target is above 103,000. The put buyers, even though their volume is very low, have a target around 78,000. If we look at the put buyers alone, their target drops to 78,000, but the overwhelming dominance is with the call buyers. Of the 28,000 bitcoins considered for sale, about 26,000 bitcoins belong to call sellers, who again have set the ceiling at 103,000. It's clear here that there is a high level of agreement between call buyers and sellers. So, if we consider the intersection of the curves in our upper zone, we have a zone of agreement between the call buyers and sellers, which also increases the likelihood of movement toward that area. It doesn't see below around 80,000 for the end of December, meaning it doesn't agree with the put buyer. We said the put buyer is looking at 78,000, but the put seller doesn't want anything below 80,000 for the end of December. So here we have a zone of disagreement, which also reduces its likelihood. Therefore, this difference is quite significant for put sellers. Another point is that most of the put sellers are from November 20th and 21st. It's really important and interesting that the put sellers mostly entered the market on November 20th and 21st, which was when the market bottom was seen and peak fear dominated the market. It seems that this fear caused these put sellers to push the floor down to 78,000. So this point should also be considered, especially from the perspective of timing. Now let's get to the pattern we saw on the chart and see what the story was. In total, among these trades of 200 Bitcoin and above, we see 7 iron condor strategies, which is really astonishing. 7 iron condor strategies with a massive total volume of 48,000 Bitcoin. 48,000 Bitcoin. 7 traders actually came in and set up 7 iron condor strategies for the end of December. The last 2 entered the market on November 25th, meaning the last 2 traders who set up the iron condor strategy for December 26th are the ones checked off here. These entered the market on November 25th, so their outlook is very recent. They've experienced the recent market events and decided to adopt such a strategy. These strategies are set for the end of December, and they see their peak profit in the range between 106 and 112. You can see 106 to 112 is where they expect to make the most profit. The entry point for these strategies to become profitable is right here. They start making a profit from 100,000 and it peaks here. So this is very important. That was the story behind these strategies and the situation that has developed and the impact it has had on the overall shape of the curve. In this slide, we see that we have moved the maturity date to December 12th, and we are examining trades above 100 Bitcoin. Trades above 100 Bitcoin for the December 12th maturity date. If you consider trades from November 20th, you can see that both sides of the curve are in profit. If we had kept the slider here, both sides would have shown the possibility of movement. But by moving the slider forward and considering trades from November 26th, which provide a fresher perspective on the market, you can see that a bullish tendency appears in the curve. Here we see something like a bullish spread. In fact, look, here we see something similar to a bullish spread. A jump from this point to the profit peak at 108,000, and below, a support floor at 85,000 is visible. Look, from this point, this support floor is at 85,000, and from here downward, the selling of puts has started and the floor has been established. And it could even reach 80,000, since the average of these put sales is about 80,000. In a very pessimistic scenario, if we consider these put sales, it could be dragged down. But on the upside, which is naturally more likely given the current shape of the curve and the prevailing market sentiment, the upward movement is more probable. On the upside, movement up to the delta peak, meaning 100,000, is actually visible. Up to the delta peak, look here, this is the intersection. If we move from here, we actually have an increase in delta, which goes along with the price. The delta increases until about here, where the delta peak is reached, which is that 100,000 delta, and it also intersects with the red curve. This is the point that can be seen, and after that we have the average of call sales, which actually happens here. The average of call sales, which is here, shows almost the ceiling at 107,000. 107 or 108,000, which is the peak point of our profit in this red area, the peak profit in this red area, which again targets the region of around 107,000 for the end of December. Well, as a conclusion, if I want to summarize for you, it seems that December will naturally be a bullish month for Bitcoin. Until the middle of this month, we can probably expect a reclaim of 100,000 and consolidation above this level, and by the end of the month, we might see a move toward breaking through 105 and 107,000. Of course, based on the massive strategies and the ironclad approach we've seen and reviewed, it's possible that intense market excitement could even push for an attack on 112,000 by the end of December. Thank you very much for your attention. In the coming days, after this analysis, this was our first midterm analysis, which will be published with a blue thumbnail. In the coming days, our first long-term analysis will be published on the channel, with a view toward June 2026. The target of that analysis will actually be June 2026, which will be updated in the coming days, and I invite you to watch that video as well. Thank you for your attention. Goodbye.